What if we got rid of all income taxes and replaced them with tariffs? Is that something that could work? What would it actually look like in real life? Let's go ahead and break it down. So there was a proposal about a week or two ago that said, hey, look, let's just replace all income taxes with tariffs. But as someone with an economics degree and someone with a master's in this field, I'm going to give you my thoughts on how this could actually play out. But first, for those that don't know, what are tariffs to begin with? The easiest way to describe it's a tax, okay? It is a tax. However, it is a tax on a trade partner. Basically, you're slapping a tag on their goods and services and saying, look, when you send your stuff over here, I'm going to make it 5% more expensive if it is a 5% tariff. What is the point of doing that? The goal is really twofold. Number one, raising money for your country, because that is what you do. That money does go into the government's pocket in one way or another, and we'll talk about that here in a second. But that's number one, okay? Number two, you also re-encourage or discourage people from buying and kind of steer them in a different direction. So for example, if I am a consumer, which I am, we all are, and I'm going into a store and I see one thing that is 5% more expensive and another thing that, and they're the exact same item, that is less expensive, I'm going to buy the thing that is less expensive. And it just so happens that the American good or service is less expensive. So it is a protectionary measure to protect American businesses or whatever the local domicile, whatever the local country is. That is what tariffs do. They were extremely popular in the 1800s. Okay, they haven't been as popular except for 2016 and on, because there are a lot of tariffs that are still in place today. But that was the point. You protect American businesses. You can raise money for your current country right now. So what happens if we just replace the entire income tax system right now? Because I'm gonna tell you this, you don't like paying your taxes, okay? You don't enjoy paying your taxes. You don't pay them with a smile on your face, okay? I can't see you, but I see you, okay? And same here, I don't enjoy paying income taxes either. I don't like the gross and the net. I just want it all, okay? I think we all do, but does this actually make sense? So here are some things that you might want to consider as you're looking at this particular proposal. Number one, you would need at least, and this is the most conservative estimate that I could find, the lowest number I could find was 70%. You would need a 70% tariff to make up for current income taxes. And that's because right now, or at least at the end of 2023, we raised $80 billion in tariff revenue. $80 billion. Okay. Now, the total budget for the U.S. government in that year, year by year, was $4 trillion. 80 billion compared to 4 trillion. That is a large gap. Okay, it's a very large gap. So now imagine how inflation has been. Nobody really likes it, though it has slowed down. Is now you're buying something and now there's a 70% price tag on top of it. Now, for those that are saying, well, you know, we, the consumers, aren't really paying that price tag because the countries and the companies paying all that. Well, remember, they pass those costs on down to you, like every single business does. Every time gas prices go up or oil prices go up, airline tickets go up. They pass those costs down to you. Every time labor costs go up, they pass those things down to you. We've all seen this. We have all literally all lived through this. Is how inflation has been going across the board, right? They all pass those costs down to you in one way or another. So yeah, we end up paying it. So that's one part of it. Inflation will rise. I'm not here to tell you inflation is going to go up by 70%. I don't think that, but you will start to see a very quick increase in prices because immediately you say, oh, my stuff is now 70%. Oh, we got a problem. Okay, and that brings us to scenario number two. There is going to be some level of retaliation, and that's not something you could really ignore. We have seen an actual trade war within the last, I don't know, 4 or 5 years, and that is something that has happened, and it did have an impact. So when you decide to slap a 70% tariff on your opponent, on a trade partner, they gonna do something back. Okay, and remember, these are trade partners, which means you sell your stuff to them as well. And let's say if you are a business, right, and you are selling your things overseas, for example, myself, people watch this channel in England, people watch this channel in Australia. I have sold books overseas. People do buy my books overseas. You have an opportunity to get your signed copy. I only got a few of them left. Okay, that link is somewhere right here. But here's the thing. Well, now, right, if you start to slap a 70% tariff and now my book goes from, let's say, $30 to $100, they're not going to buy it over there. And if they're not going to buy it over there and I can't sell it and I sold tons and tons of books overseas, that's going to be a problem for me as a business owner. Now I'm hurt and now I'm upset because I can't sell my things. So when it comes to particularly people like farmers or people selling certain types of goods that are really popular somewhere else where they don't have those particular things, that is a major issue. And we did see this in farming over the last few years. I think in 2018, 2019, and 2020, when we had a major issue because of the trade war, because they couldn't sell their stuff because of retaliatory tariffs. So there are going to be what we call knock-on effects, domino effects, whatever it is that you do want to call it. So can you do it? Can you replace income taxes with tariffs? Yeah, you can. It just might not be the best idea. However, what if you did? What would happen if we did? I told you all the negatives, but let's say we did. Are there any other things that we might want to be aware of? Is there a way that this could work? And if so, like, how would this play out in practice as well? Well, let's say you did. Let's say things got more expensive. And let's just say it was something that we decided to live with. Because you say, well, fine, I still don't want to pay income taxes. I want the whole paycheck, and I will just decide, I just won't buy things from a certain country. I just won't buy the things that have a tariff on it. Cool. Okay, now you move into what is called a consumption tax, and it is something we've actually covered on this channel before. You can check out that video right here. But basically, you're now going to be taxed on, depending on what you buy, what you decide to buy. And that does sound okay in theory, but it really depends on how much money you make at the end of the day. So it comes down to a baseline. So for example, let's say that it costs you exactly $20,000 for every single person in the US to live. Now, I know that it's not a realistic number, okay? I'm just throwing out a number. It's just easy for everybody to understand, okay? Let's just say rent, water, food, just to live. No, nothing fancy. No vacations, no nothing. Just to live, $20,000. Now, if you make $100,000 a year, anything over that is all yours, and you are living great right now. If it was only a consumption tax, because you only need to spend $20,000, and everything else is essentially tax-free. Because where else are the taxes coming from? I mean, where else? Right? You don't have any income tax. In this scenario, I guess we don't have any capital gains tax or anything like that. There's no other taxes out there. So you get to keep all that money. But people who are closer to that $20,000, that margin is much slower. So imagine you had $80,000 tax-free to invest. If you make $100,000, you on and popping, right? I mean, it just, that wealth starts to multiply very, very quickly. Let's say if you're making $50,000, if you're making $40,000, if you're making $30,000, then things get a lot harder because you only have a $10,000 gap between you and just barely making it. And yeah, you make more money, but let's say cost of living does creep up. Let's say tariffs do increase a bit more, and then things get a lot harder for you, and then you run into a very, very serious issue, and then the scales do get tilted and really don't help people on the bottom end of the spectrum. Now, whether or not you care about that is totally up to you. But that brings us to our current income tax system, and that's why we call it a progressive tax system, because the way that it works and the way it's supposed to work is people on the higher income spectrum pay a different tax rate than those on the lower end of the spectrum, because if you make less, you don't have a ton to pay, right? So even when it comes to capital gains tax, that means the tax that when you sell a stock, I think the lowest is 0. Right? If you make a little bit of money, you pay 0 taxes depending on when you sold that stock. We did a video on that, on what happens when you sell a stock, depending on if you're married, when you sold it, so on and so forth. So there is a way, right? Depending on all your income and all kind of stuff. But then if you are making $300,000 or $400,000, you are going to pay like a 20% tax on those sales and gains. And that's a reason for it, because you got the money versus people who do not. And that's one way to kind of even out things and make things a bit more fair. So that is why we have the current system the way that we do. Now, let's say that you don't still like the current system. Nobody does. I don't either. So I think what the real question you're trying to figure out is, well, what can I get for what I pay? I can't answer that for you. I don't run the tax system at all. Okay, don't direct your anger at me. Okay, but looking at it from an economist perspective, looking at it from a finance perspective, it doesn't really make a ton of sense to replace our entire income tax system with tariffs. Is there another way? Is there another system, another mechanism to replace that? It's tough. It would be tough because remember, 75%, really over 75% of our entire budget, that $4 trillion number, comes from some level of income tax, whether it's like Social Security, payroll taxes, or just straight up income taxes. It comes from some level of that, and only 2% from tariffs in and of itself. The idea of tariffs pulling in all of that when you don't look at any of the consequences sounds great, because basically charging somebody else to pay all your bills. Using other people's money is a great strategy for almost anything, right? But it is not necessarily the most realistic thing. However, if you do want realistic advice and realistic things that can actually help you and your tax bill and your portfolio, I have some helpful tips, and you can find those in these videos right here.